All right, welcome back, ladies and gentlemen. So you made it through Unit 1, which was all about deciding whether or not you're going to start your handyman business. So now that you're here in Unit 2, the assumption is you've decided to start your handyman business. And what we're going to do in Unit 2, quite specifically, is we're going to form our business identity. We're going to become a new entity. Now, what does that mean? An entity, that's you. You're an entity. Any LLC, any corporation out there, those are entities. Even sole proprietors with their own EIN from the government for tax purposes, those are entities. So you right now, you are your own entity. And what you want is for your business to have its own identity, to become its own entity separate from you. And there are two ways that you can do that. Number one is going to be as a sole proprietor. Number two is going to be as an LLC. Technically, there's some other ways, but really the two options you're going to be looking at is sole proprietor or LLC. So what's the difference between those two? What is an LLC? Because a sole proprietor is actually just you. There is no separation between you and your business as a sole proprietor. All the money pulls into one account. All the money gets paid by one entity. The IRS treats you the same. Everybody else treats you the same. So a sole proprietorship is just simply not forming much of any business identity at all and letting the business just be you. An LLC, however, is a limited liability company. And we're going to talk about what exactly that means and how that does or doesn't help you. Because the very first thing you're going to have to figure out before you go through with any of this business identity is you're going to have to figure out if you're going to be an LLC or a sole proprietor, because everything else you do from this point forward is going to be done as an LLC or as a sole proprietor. And I want to be very clear about something, by the way. When you're done forming your business's identity or entity, when you're finished with that process, you are not yet a business. You will still need a business license before you're a business, but your business, your future business, will now have its own identity. So let's jump in to talking about exactly what an LLC is and why you would or wouldn't want to have an LLC. So I'm going to start with why you shouldn't be an LLC, because honestly, there's only one really good reason to not make your business an LLC from the first day, and that's simply because it costs a little bit more money. You have to pay something to form an LLC, and then once you have an LLC, you're going to have your LLC file its own taxes every year. So instead of your own personal tax return, you're now going to be doing your tax return, and then your business is going to do its tax return. So that's going to cost you some slight additional amount of money to have that second tax return done. However, if you're making at least 50 grand a year, which every single one of you who does a decent job as a handyman will do in their first year. I did 100 my first year. Tons of y'all on this channel did 100 your first year. And even those of you who didn't do 100 your first year, you still did 60, 70, 80, 90 grand. You came close to 100. If you're doing a good job with a handyman business, you're going to quickly approach or exceed 100 grand a year. So let's talk about now what the LLC does do for you and why it's a good thing to have. And the very first thing is going to be in the name of the LLC, Limited Liability Company. What this means to us is that our legal liability, our personal, Ray Duke, my personal legal liability is limited if I have an LLC, because now my LLC is actually the entity that may or may not get sued or file bankruptcy. And the reason I mention this is because, of course, you're working on people's houses. You're working on electrical, you're working on plumbing. You could make a mistake that floods somebody's kitchen, burns somebody's barn down, or God forbid, burns somebody's entire house down. And they can sue you. And if and when they do sue you, if you're not an LLC, if you're a sole proprietor, they're coming directly after you, which means they're coming after your house, your car, any assets that you own, and even your future income. However, if you're an LLC, and I stress this next if you separated everything and you took care of your LLC correctly, meaning you didn't spend the LLC's money on personal stuff and you didn't spend personal money on the LLC, if you kept those finances fully separated like you're supposed to, then when you get sued, or if and when your business needs to file bankruptcy, that suing or that bankruptcy, all of the liability is on the LLC and not on you personally. So worst case scenario, your LLC files bankruptcy, goes out of business, disappears forever, but you're still okay. your personal assets, your house, your car, and your future income potential, those still all belong to you if you have an LLC and something goes wrong. So it's literally in the name, limited liability. That's the main purpose of an LLC. But we also want to talk about a lot of the other reasons that you may or may not want to have an LLC. And one of the biggest ones that I think you're going to find is going to come down to the fact that other institutions are going to view you as more legitimate. This is not simply customers. This is not simply property management companies and universities and cities and counties and states and governments that you may or may not want to do business with. It's not just them. It's also lenders. It's also insurance companies. A lot of the people you're going to need to do business with are going to look to see whether you're a sole proprietor or an LLC. And oftentimes you're going to get charged more for insurance, or you're just going to get charged higher rates in general across the board. And some companies won't even work with you or consider you to be a legitimate business if you're not an LLC. So you're going to find as you start out, simply being an LLC is going to give you a leg up almost everywhere you go. And being a sole proprietor sometimes is going to mean certain places literally will not even do business with you until you become an LLC. Now, the next topic we're going to cover about being an LLC is going to be, I think, equally important, and that's going to be the thousands or tens of thousands of dollars per year that it's going to save you on self-employment taxes. So I'm going to describe to you as clearly and concisely as I can how this works. If you are a sole proprietor, or if you are an LLC, but who has not elected to be taxed as an S-corp, being taxed as an S-corp is simply just a piece of paper that you fill out and mail in to tell the IRS that you elect to be taxed as an S-corp. It's a choice you make. So if you're a sole proprietor or an LLC who has not elected to be taxed as an S-corp, then all of your taxes in both of those scenarios, they both work the same. And the way they work is every penny that comes into your business is considered personal income that got paid to you, and it's now on you to figure ways to get deductions from that so that you can pay less in taxes. But more importantly, all of that income that's coming into you, you're going to be paying self-employment taxes. That's the FICA and the Medicare and stuff. Those are your self-employment taxes, and those add up to about 15% total between what your employer, if you had a job, would normally pay, and then that part of it that you pay as an employee. That's your self-employment taxes. So as a sole proprietor or as an LLC who has not elected to be an S-corp, you pay self-employment taxes on all of that money that is not a deduction or a business expense. However, if you're an LLC and you elect to be taxed as an S-corp, and you cannot do this, you cannot elect to be taxed as an S-corp without your LLC, which is why it's important for you to know this. Once you've elected to be taxed as an S-corp, the IRS looks at you differently. Now what they do is they expect you to set a fair wage for yourself, a fair salary as the owner of the business. So you can set that at 50 grand, you can set that at 25 grand. There's a lot of debate as to what is a fair salary, because what you set as your fair salary may affect whether or not the IRS decides to come audit you someday, or if they do audit you, it may affect whether or not they feel that you did your job correctly in setting a fair salary. But you're going to set a fair salary for yourself. And suffice to say that 50 grand a year is definitely fair. Most people are claiming far less than that. I do 50 grand a year. That's my fair salary. So I pay my self-employment taxes on that 50 grand a year. However, I make well over 100 grand a year, which means that the other 50, instead of paying that 15% in self-employment taxes on that other 50 grand, instead of paying on that, I only pay it on the first 50 grand, which is my fair salary. The other 50 grand is now considered a distribution from my LLC to me. It is not part of my salary, therefore I don't pay the self-employment taxes on it. Now, there are other taxes that will still apply to that, but you're going to save the self-employment taxes on that other 50 grand. Anything over that fair salary you set for yourself, you're not going to pay those self-employment taxes on, and that is a lot of money, guys. A lot of money, especially anytime you get over 50 grand a year, but especially as you approach 100, you're going to start talking about $5,000, $6,000, $7,000, $8,000, $9,000, $10,000. You get up to 150, 200 grand a year, which is very realistic for you. You get up to those numbers and you're literally talking about multiple tens of thousands of dollars per year in self-employment taxes you're going to save. So you want to go into that situation already an LLC with the option of filing as an S-corp. Now, something else along the same line that you're going to learn with your LLC or without your LLC is a lot of these companies, like I said, that are going to view you as more legitimate or less legitimate, depending on whether or not you're an LLC. Another thing those companies are going to be able to do for you is help your business, because remember, your business is now a separate entity from you. They're going to help your business build a business credit history so that in the future, when you are prepared to go ahead and buy 2 trucks and hire 4 employees and grow this business, when you need to take out that business loan, the bank's going to require some business history, some business credit history. And you can't have that if you're a sole proprietor, or if you do anyways, it's all going to be on you, and it's going to be your personal credit that they're looking at, your personal liability. And just trust me, you're not going to grow this business into the future and remain a sole proprietor. You are going to become an LLC. It just doesn't make any sense not to. So again, starting out from the beginning, if you can start out as an LLC, you can get accounts with places like Granger and a bunch of other places, and you can use your business's EIN number for those accounts, and you can start building that business credit history right off the bat. And that's going to mean that when it's time for you to take out a bigger business loan to grow, you're going to be able to do that. And another little benefit it's going to give you to be an LLC is just simply that if you want to bring on a partner, or if you want to sell the business, if you want to move around ownership of the business, you can't do that if the business is you. You can only do that if the business is its own separate entity. So being an LLC from the get-go is going to make it easier to bring on partners, get rid of partners, or sell the business whenever you decide to later on. And in a similar vein, it's going to allow for legacy planning. If the business is you and you die, the business doesn't exist anymore. If the business is an LLC and you die, the business still exists. It can be left to your spouse, to your children. It can still be run. It can still be maintained without needing to dissolve the business and reinstitute the business with a new EIN and a new LLC. If it's already an LLC, you can just pass that on. And I forgot about this one. If you're an LLC, you are about 1/3 as likely to get audited by the IRS, which means if you are a sole proprietor, you are 3 times more likely to get audited by the IRS. Guys, I cannot think of a better reason to be an LLC than to reduce my odds of getting audited by the IRS by 66%. I would love to have a lower chance of getting audited by the IRS. And I don't think I mentioned this, by the way. If y'all want to become an LLC, because the next video that I'm doing is actually going to be, I'm making Bulletproof Handyman into its own LLC. It's currently wrapped up. It's already under an LLC, but it's under my Handyman Businesses LLC. So I'm now making Bulletproof Handyman for liability reasons specifically, because the handyman business is a high liability business. I have subcontractors doing electrical and plumbing work on people's houses. If they make a mistake, I don't want the handyman business getting sued to mean they have access to any revenue that comes in from Bulletproof Handyman. So the next video I'm going to do is actually going to be a step-by-step follow along right here on the internet with a screen share, a step-by-step video of me forming the Bulletproof Handyman LLC. And I'm going to be using Northwest Registered Agent to do that. And there is a link to Northwest Registered Agent in the description of this video and in the description of all of my videos. So click the link in the description to form your LLC with Northwest Registered Agent. I've already looked at their process. It's a very simple, it's literally like a 5 to 10 minute process at most. It's very affordable. They charge you $39 or $40 basically. So $39 plus your state's filing fee. So here in Arizona, I think the state charges like $50 or $100 for a filing fee. Clearly, they're not going to dig into their own pocket and pay that for you. But they're going to charge you $40 for the part that they do, plus your state filing fee. There's no nickel and diming to get to the end of it. I promise you, when you look at these other sites that say they do it for free, none of them do it for free. By the time you get to the end, they're going to have nickel and dimed you into $100 or $200. So use Northwest Registered Agent. Pay $39, form your LLC today, and watch from my next video where I go step by step through that website to actually show you the process to form your LLC. But if that's not out yet, don't worry. It is insanely easy. You'll figure it out in 5 minutes. So where were we at? You're less likely to get audited by the IRS. And also, yeah, I already mentioned that one. So number 9, payroll and W-2 employees are much easier. So I want to be clear. It is possible to hire a W-2 employee without being an LLC. You can get an EIN as a sole proprietor. You can manually rig everything up so that you can have a proper W-2 payroll system for a W-2 employee without being an LLC. But almost every business follows the same path. They start as a sole proprietor. When they're ready for their first W-2 employee, they jump through a whole bunch of hoops to hire that first W-2 employee because they need them right then and there. But before they hire their second employee, they've become an LLC and usually an S-corp, and they have to go redo everything. And I guess that brings me to my next point is, here's what's going to happen. Is all of these little benefits to being an LLC, most of them don't really matter to you a whole lot right now at the very beginning of your business. But I promise you, a year from now, if you're doing a good job, you're going to be very successful, you're going to be growing, and you're going to be needing a lot of benefits that come along with an LLC. And what you're going to want to do at that point is you're going to want to dissolve your sole proprietorship and form a new LLC. But here's what's going to happen when you do that. To form your new LLC, you're now going to need a new EIN. Your old EIN as a sole proprietor can't just transfer into your new LLC. So you need a new EIN. You're now a new entity under the IRS with a new tax history, a blank tax history. And same thing with your bank account. Your bank account is assigned to your EIN, just like your personal bank account is assigned to you as a person with your social security number. Now you need a new bank account. You might need new insurance. You might need new workman's comp. And in fact, you might find out a lot of places won't even give you workman's comp insurance to cover your employees. They won't even give that to you if you're a sole proprietor. You'll have to become an LLC just to be able to get the workman's comp from a lot of these companies. So what's going to happen is you're going to get a year or two in. You're going to realize you should have been an LLC from the beginning. You're going to go become an LLC, and now you're going to have to go get a new checking account, new everything. You're going to have to start from scratch, dissolve your business, and reform your business as an LLC. And what this is going to do, other than being a pain in the ass, this is going to reset everything now. So your business's credit history no longer exists. Anything that sole proprietor did to build credit is gone. All of that history, all of the revenue history, you know, if you want to go take out a big loan, you're going to need to be able to prove the history. And I'm talking about even you personally. If you want to personally be able to take out a loan to buy a house and you're self-employed with your business, they're going to want to see 2 years of you paying yourself very well from that business. And your old sole proprietor business is not the same as your new LLC business. Now, some banks are going to work with you and some are not. But that's kind of the point, is you're going to find all these hassles by not being an LLC. And it's just going to be way better for you, in my opinion, to start from day one as an LLC. And also, in my opinion, assuming you're doing this full time and you fully intend on busting your ass all day, every day to make this work, start as an S-corp right away so you don't have to worry about that later. And if you don't do an S-corp, don't worry. But I mean, really, I think it's just going to make more sense to just do that from the beginning. Get yourself on payroll from the beginning. You'll be paying your income taxes and everything, which is going to save you later on from the shock of when you realize, oh God, I didn't pay any taxes for a year. Put yourself on payroll. Get a real payroll system like Gusto or QuickBooks. Those have links in the description too. Put yourself on real payroll. Pay your income taxes as you go throughout the year. And by the time you get a year into this, you're going to be happy that you just started as an LLC, you started as an S-corp, you started with payroll, and you just started legit. So here's where we're at, guys. You need to form your business identity. That's the step now. You got to make this decision now. So make your decision. I'm going to be a sole proprietor or I'm going to be an LLC, because when you start with the next videos are going to take you into actually forming this business identity, and it's going to be as one or the other. So make your decision now. Click to the next video if you're going to be an LLC. Use the next video to guide you through that process for how to do that on Northwest Registered Agents website. And then after that, everything we do from this point on is going to be as an LLC. Your LLC is going to get its own checking account. Your LLC is going to set everything up. You will be a new identity, and you will now be able to walk around saying, look, here's my business. This is my LLC. Anyways, I love you guys. I hope you're out there killing it, and I'll see y'all on the next one.